Ms. Kim.
Sure. Thank you very much, all the panelists, for being here. It was really, truly an insightful discussion, and I just wanted to focus my question directed to the funding issue in order for us to continue and see the completion of this very important project. Again, we're all concerned about the connectivity throughout the state of California, and we want to see if now that this is going at full speed, and there are some of us with a lot of concerns about this high-speed rail project, but since it's moving forward, I want to ensure that the funding will be available. You mentioned Mr. Hassan, it's easier. And as a member who represents the Southern California, it is really important that what you just mentioned about MOU you had with the High-Speed Rail Authority is really carried out, and really you gentlemen from the High-Speed Rail Authority keep that promise. Why are you here? I am hearing that you are saying that this promise made and the MOU that you enter into will be kept because it's legislatively authorized to give $600 million to the northbound project and $500 million to southbound. But it is also appropriate not just by the legislature, but also has to be approved by the court. With that, we are concerned. I would like to ask Ms. Jessica Peters from LAO and Mr. Thompson if you can elaborate on the risk involved, because I believe you touched on some of those, and ensure us that it's one thing to say we enter into good faith MOU and you are ensuring that the promise will be kept, but there are a lot of things, factors involved that may not be. And that's going to be out of your control or the legislature's control. So I want to hear some of those risk factors and what you can tell us about that.
Thank you. We referred to several different kinds of risks. One of them is litigation risk. The money in Prop 1A is still subject to litigation, and that may just be a timing issue. It may be an amount issue, but that is certainly one risk to be taken into account. It certainly could be a problem for someone like Caltrain, for example, if they cannot go ahead with their electrification or rolling stock procurement because the money they need is tied up in litigation. And I don't know how to forecast litigation risk. A second risk that we mentioned was the spending of the ARA money. That money must be spent by September 30th, 2017, or whatever portion isn't spent goes back to the Treasury, and the odds of getting that extended, I don't know how to forecast, but I would say
it's zero.
I would say they're low. It isn't going to happen. Another risk that we talked about was securitizing the cap-and-trade funds. I want to stress that there are two different points there. One is cap-and-trade funding as it continues. That's one thing. And then the other is being able to sell or securitize a forward stream of income. What the private sector investor said was that they do not believe that it can be securitized to the private sector unless the continuation of the program is guaranteed and unless the share of the authority is made secure one way or the other. They would prefer a stated amount be provided, but if that's not possible, then certainly they would like to see the authority share. And then another risk would be if the authority wanted to provide something like an availability payment guarantee, which is another tool that the private sector investors mentioned. That would require a backup from the legislature to say that the authority has the right to provide that kind of guarantee. Now, I know they've not asked for that, but if you wanted to accelerate the project, providing of something like availability payments would be a way to get something built faster than it has been. And of course, the other risk that we've discussed many times is that the capital cost forecast, the revenue forecast, and the demand forecast are still based on limited experience. They are as good as you can have now, and we've not said they are not, but they are still subject to a considerable range of outcomes, and until we have a lot more experience behind us, we will not know what that range of outcomes is.
So I think we can actually capitalize on that question, because the LAO and Brian might be able to help me understand the administration's plan to use cap and trade until 2050. My understanding is that at some point cap and trade will ramp down. The credits that could be sold, they'll ramp down, the credits could be sold, and that auction revenues will actually diminish as things get better. But yet the plans are to use them at the level they are today, and that's up to 2050. What am I missing here?
So we have Ross Brown of our office, who is our cap and trade expert. So if you want to go really deep into this, we can see if we can squeeze him up on the table here. I think projecting out cap and trade revenues, and Ross can correct me if I'm wrong here, can be really difficult to do, and there's a lot of factors. So you have not only the number of allowances going down, but you have the price, and so it's possible that as the number goes down, the price goes up, and it's somewhat uncertain about what exactly would happen. I think it also would depend on how effective the state's other greenhouse gas reduction programs are, and how much the cap is relied on, as well as certain other policy decisions around the cap and trade program.
Chairman, I would like to have a follow-up question to my first question.
And you'll get that chance when I get done, ma'am. Go ahead and kind of segue into that.
Thank you, Ross Brown with the Legislative Analyst's Office. I think my colleague, Ms. Peters, summarized, I think, a lot of the key uncertainties associated. If you are assuming the cap and trade program is continuing over the long term, there are a lot of different factors that can affect the amount of revenue that is available to the state overall and the proportion of the revenue that's available for high-speed rail. Ms. Peters mentioned just the interaction between, as the cap ratchets down, you're correct that the number of allowances that would be auctioned off could likely decrease, but there also would be an offsetting effect likely associated with the rise in price as those allowances become more scarce. And so you have those types of factors, as well as just general economic factors throughout the economy, what's going on with the economy, technological advancements, all sorts of things that can affect particularly the price of allowances, as well as just government and regulatory policy decisions about, for example, the portion of allowances that are given away versus auctioned off, and those types of things.
So my question then being, in a financial aspect, with that kind of uncertainty, how would you be able to bond any kind of futures based on that explanation?
Yeah, so I think what we identify in our report is that given the current 25% continuous appropriation to the High-Speed Rail Authority, even if you remove the sort of legal risk of whether it continues beyond 2020, that is likely not going to be good enough, and I think is sort of confirmed by the responses from the private sector in order to structure some sort of financing against that. Even if even the authority could pull something together, you'd very likely have very high financing costs to do that. And so it's in the state's interest to try and structure the funding from cap and trade to be as sure and secure as possible, so that investors, if you're bonding against it, or even if you're committing to repay a loan, or they have a variety of different options in terms of financing, you want to have that be as low of risk as possible. And so I think we had the similar findings to what the peer review group did, and I think similar to what was provided in the request for expressions of interest from the private sector last fall, of providing a set amount rather than a percentage. That way, if the total amount fluctuates and the percentage drops below what would be necessary to repay the debt, that would be assured, providing a first call on the funds. It's much more likely that you would have $500 million total available coming in to repay financing than it is that you would have 25% would generate $500 million. And so there's things that you can do in terms of the structure of how this funding is provided to the High-Speed Rail Authority that would make it better facilitate financing, and we think that those steps would need to be taken in order to facilitate that securitization. Again, assuming you've gotten rid of the legal risk.
Understood. Thank you, Ms. Kim. And then Mr. Gray.
Thank you very much. I think when I was listening to Mr. Brian Kelly's testimony, you mentioned that it was your understanding that the cap-and-trade funding will go beyond what is stated in 2020. I'd like LAO to clarify whether it is your same understanding, because the reason why I ask is that the access to funds through the continuation of cap-and-trade money beyond 2020 is very important because it is tied to getting the access to bond funds, right? The authority will need to submit a funding plan that identifies all funding sources for the first segment of the project. And so how can they do that if the cap-and-trade expires in 2020? It is, I think, very important point to make, and I want some clarification on this.
There was a response to expression of interest by Barclays Bank, which I think was the best description of this. What they said was, no long-term standalone cap-and-trade financing is possible until 4 threshold issues are resolved. First, CARB and high-speed rail must prevail against pending legal challenges to the cap-and-trade auctions and to the use of greenhouse gas reduction revenues for the high-speed rail project. Second, the authority must create what they call the plumbing in law to support borrowing against the greenhouse revenues. Third, the legislature and CARB, respectively, must extend the cap-and-trade program in law and regulation beyond 2020. And finally, the legislature must protect the 25% of GGRF revenue flowing to the authority from future impairment by the legislature as long as financing obligations are outstanding. I think that's the clearest description of what they felt the private sector's view of the use of the greenhouse gas financing is.
I don't know if I'm missing something here, but that interpretation, you just mentioned, Mr. Thompson, that the legislature must expand cap-and-trade money to make it available, but isn't that up to the court interpretation? What if the court interprets it the other way? And
well, the first condition was that they have to prevail against the existing legal challenges. If they lose that, then we have a problem. But assuming they prevail against those challenges, that it is not a tax but is a charge, then in order to securitize it, and this is the issue, to sell those future revenues, you need these conditions to be met.
Mr. Gray?
Thank you,
Mr.
Chairman.
I think I asked LAO to also expand on it, so may I?
Sure. I think that there's a number of risks related to cap-and-trade. So if you're looking at, I think, what your background paper terms the sort of the financially constrained, looking at the iOS North that's proposed, about half of those funds necessary to build that segment would come from cap-and-trade revenues beyond 2020. So that's a risk right there. If the program is not extended beyond that, our understanding is that it's not authorized beyond 2020. Those revenues would not be available unless the legislature took an action to do that, and at a minimum would be subject to significant legal uncertainty if the administration did try to continue the program beyond 2020 without the authorization. I think you're also hitting on another risk of, if you don't have a full funding plan because some of these revenues are uncertain, does that limit your ability to sell Prop 1A bonds? And so it certainly could. There's obviously a lot of litigation risk on the project that will most likely continue There's litigation risk on the cap and trade side of things as well. I think from our perspective, the bigger piece was if you don't have the cap and trade, sure, not only can you not sell these Prop 1A bonds, but you don't have half of the money you need now to build this line. And so then you really don't have a full funding package for that initial operating segment. So I think you're hitting on a couple of different issues. I hope that clarifies.
Mr. Kelly, I think you wanted to...
Yeah, Mr. Chairman, since my original testimony was referenced, I did want to weigh on this a little bit. I think I said in my original statement that CARB, who I want to make sure the committee understands something first, that the cap and trade program is run and operated by the California Air Resources Board. My agency and the High Speed Rail Authority are recipients of some of those revenues under law passed by this body in 2014, SB 862. The court case, there's a couple of issues. There's no doubt there's some risk, but I want to say that there's first a court case that is generally charged with determining whether or not the structure of the cap and trade charge is a legitimately developed charge or fee. At the lower court, the state prevailed on that question. It is on appeal, and that is pending, and I don't know the date by which the court will decide that, but it's, I think, worthwhile to note that the court prevailed at the lower court level on that question. The second part is, again, we did check with CARB as we put this plan together and asked about the assumption of a $500 million revenue source from cap and trade for these purposes and whether that was reasonable. I believe it is CARB's view that they have current regulatory and statutory authority to continue the program beyond 2020. That is my understanding from CARB. That is why we included this in the high-speed rail program. But I also want to say, as a recipient, high-speed rail is a 1/4 recipient of cap and trade money. 75% is going to other things in my world and outside of my world. So on the question of would we all gain from better clarity, would every recipient program gain from greater clarity on that, I think the answer is probably yes. I would also say that the question of there was one more question that you asked about it that I wanted to
1A bonds?
I'm sorry?
The 1A bonds?
No, it wasn't the 1A bonds. There was another, I'm sorry, I'm forgetting your last point, but there was an additional question about the security of the funding going forward, but I can't recall exactly how you framed it, so I don't want to answer that. I'll hold off on that until I can remember exactly how you asked it. But I would say, again, the court case is pending, and again, we want it at the lower level for planning purposes. We did check with CARB on the reasonableness of our assumptions for purposes of financing this program. And I would just say, I think it's another important point, and I think I wanted to make this too. Clearly, legislative intent on the availability of cap and trade dollars has been stated and reiterated beyond 2020 in many different forms. SB 862, which is the legislation that first laid out the distribution of cap and trade monies, does not sunset in 2020. And just last year, legislation that passed, SB 9, which passed with nearly unanimous vote, asked my agency to ensure that we extend the transportation program beyond 2020 in the first cycle until 2023, and then every 2 years after that. So there's certainly an intention that for not just high-speed rail purposes, but for broader purposes, cap and trade monies are available beyond 2020. I know there's some uncertainty about it. I know there's some risk, but we are going off of the best advice we got from the Air Resources Board, who runs the program.